Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 20th of January. It's been another week of twists and turns. US markets had a particularly strong day on Wednesday. Some of that came back on Thursday. Again, inflation and interest rates are the central themes. There was a soft inflation reading in the US and one in the UK as well, both of which prompted views that perhaps interest rate cuts are back on the table. The Bank of England meets in a couple of weeks' time. In terms of the FTSE 100, that's opened at a new record high early on Friday morning, largely driven by global uncertainties. Obviously, there's a lot of stable cash generative companies in there, but probably the main reason being the weakness of sterling. Obviously, we've said before, around 70% of FTSE 100 companies derive earnings from overseas, in the US in particular. So that pound weakness against the dollar means that those profits earned overseas are more valuable on repatriation. So in the year to date, such as it is, we've got a situation where the Dow Jones is up by 1.4%, the S&P 500 up by 0.9%, the Nasdaq up by just 0.1%, with the early leader by some distance being the FTSE 100, which has already gained 3.8%. Turning to next week, there's three companies, each of which have had some very interesting share movements of late. The first one is easyJet, where we're expecting a trading statement. The shares have managed to add just 0.5% over the last year. And a big factor in that is the fact that over the last month, the shares are down 14%, potentially on the ongoing geopolitical concerns which we've seen in various parts of the world. That's despite the fact that the last time we heard from easyJet, it had had an extremely successful summer. Adjusted pre-tax profit was up by 34%, with other highlights being not only its easyJet holidays business, which is growing at pace, but also the additional revenues it's getting from its ancillary services. These are the ones where, when you're flying, you can add preferred seats, baggage, food, etc. That's something that's playing into the easyJet story. Next is Associated British Foods. These shares are down 14% over the last year, not helped by a 20% dip over the last 6 months. This is a mainly diversified business, so we've had some weakness in sugar prices, which has hurt the shares. On the other hand, its grocery business has been contributing to some pretty good profit numbers. But of course, it's Primark, which we normally associate with AB Foods. And although it suffered from some poor weather over the summer months, there were nonetheless some good figures. Revenues grew by 6%, adjusted operating profit by over 50%. And finally, Burberry will update us with its third quarter numbers. Now, this is a share which has now just declined by 18% over last year. Part of the reason for that improvement compared to where it had previously been is that in the last 3 months, the shares are up by 53%. The company's been undergoing a great deal of strain over the last year. There's been all change at the top. It's introduced a new Burberry forward strategy, and it's possible that improving fortunes maybe in China have had something of an impact, not to mention the fact there were some very strong numbers from the luxury goods sector in the form of Richemont earlier in the week, which read across to Burberry. So very much watch this space. Shares still remain down. They've still been relegated to the FTSE 250 index, but they're currently, in terms of momentum, regaining some of that ground. Thank you for watching. Have a great week.